Did the S&P 500 just gap and crap on us yesterday? Let us analyze this together and take a look at the potential deals that will be coming our way in the market, while you trade and invest where you deem fit. And also, remember to smash that like and subscribe button. Last Friday, the SPY closed at a price of about 317. Yesterday's open, it gapped up all the way to $320. And from there on, it went up higher all the way to about 322 before coming back down to a close of 314. All right, and you can see this very clearly on the intraday chart. If you go over to the minute chart, things are generally turning out all right. The S&P 500 opened and test a low of 319 before making higher highs and higher lows, and everything seems all right until 2 p.m. in the afternoon session, where the uptrend could not hold, and you can see prices breaking down through all the moving average supports, and then from there it went all downhill, all the way to the close. On the day itself, SPY fell by about 0.87%, almost close to 1%. But this is not the exciting part. The more exciting part is that the Qs, which are tech heavy, is also experiencing a huge drop. While the SPY closed lower by 0.87%, the Qs fell slightly more than 2% on the day itself. And we can see this very big red candle and also a bearish engulfing pattern that is forming on the daily chart. So this is not surprising because the Qs have been very overbought in the recent days. If you look at the indicators, we can see that the Bollinger Bands is showing overbought signals, Stochastic Full, another overbought signals, and the RSI, the third overbought signals. So it is of no surprise that we should be expecting some sort of correction in the Qs anytime soon. For the Qs, we can see that ever since the March lows, the only somewhat significant correction was during the April period, where it fell a little bit, and subsequently it has been one smooth line up all the way till now, with all the small little pullbacks to the 20 exponential moving average. So the tech sector has been very overbought, and with the formation of this bearish candlestick pattern over here, I expect more downside to come. Hopefully a healthy retracement will bring it back to the 20 exponential moving average, or even better, bring it down to the 240 levels, where it is soon to coincide with the 50-day simple moving average shown in blue. So these levels will be the ones that I'll be watching closely for now. And if we take a quick look using the Fibonacci retracement tool, we see that if we connect this huge impulsive wave up from the start to the end, the respective Fibonacci levels coincide rather closely with the support levels that I've drawn out, right? The 250 coincide with the 23.6 Fibonacci retracement level, which I've always regarded as a rather weak level of support, and the next one being the 38.2% level, and this coincides with the 240 horizontal support that I've drawn. The 50% mark shouldn't be that strong in this case, since it is in the middle of nowhere. And lastly, our strongest level of support when taking into account Fibonacci retracement would be the 61.8%. And this, you can see that it is going to soon coincide with the 200-day simple moving average as shown in red. So for a slight correction, I'm hoping to see prices reach at least the 20 EMA. And you can see that the 20 EMA has support prices quite a few times in history already. So this time, if we can hit the level and show a pivot point up, it could very well fall into our momentum swing trading strategy. Better still would be for prices to break the 20 EMA and then continue correcting down to the 50 SMA or the 240 level. And if that happens, we will have more deals in the market to come. Alright, so that's for the Qs itself. And if we zoom in to take a look at the individual tech stocks, we can all see that they are all very overbought, right? For example, Amazon, the past few days it has been going in one straight line up, a parabolic move upwards, which I've always described as a very dangerous phenomenon. And it cannot last, and that prices sooner or later will have to come back down to visit the moving average supports, which act as a magnet. So Amazon likewise, I like to see prices hitting the 20 EMA again, and this moving average have been supportive of prices in the recent past. And if a bigger correction were to happen, perhaps will be down to the 50 SMA before rebounding back up. Amazon will be reporting its earnings on the 23rd of July, so let's keep a lookout on this. Facebook is not in that extreme position as we have seen in the Qs and Amazon, but nonetheless, it is still considered rather overbought. So a correction back down to the 50 SMA 227 would be great, or even better, back down to test this barrage of moving averages would be a good deal for us as well in terms of value investments. And we have Microsoft, also another overextended tech stock. I've marked out using the Fibonacci extension tool. using the previous impulsive wave and corrective wave. The target for the impulsive wave that has just ended is somewhere at 100%, which is the $213 level. And very clearly, you can see prices resisting this level very nicely. And then lastly, yesterday, prices could not hold up anymore and then fell to a close of 207. So for Microsoft, the 20 EMA would be a good target to bounce off for a quick swing trade, but nonetheless, I will still regard Microsoft as being quite expensive. And lastly, TSM is another stock that I've been trading in my trading portfolio. TSM is showing very overbought conditions. You can see all three conditions being overbought. And as of yesterday, TSM has closed with a bearish pin bar. So with that, I'll expect prices to go back down, perhaps maybe to the $60 support, or even better still, back down all the way to the 50 SMA or the 55 support over here. Right, so with that, I've closed a lot of my trading positions, including the TSM diagonal call that I've executed back, I think 2 months ago in May. If you have been following my live analysis, you have seen how I executed this trade. Alright, so if you're interested in how I perform in this trade, do keep a lookout on the channel. I'll be consolidating and compiling all the snippets into a full explanatory videos on how I trade diagonal spreads and also how I manage my risks. Now, another thing that I would like to point out is that even though the broad market SPY itself were down by 0.87%, we can see that the financials themselves have been holding up pretty well. The financials were up about 0.5% from yesterday. And we can see that for XLF, which is the ETF that's tracking the financial sector, it is well up above all the short-term moving averages, the dotted line, 20 EMA and the 40 EMA, and along with that, the 50 SMA itself. So it seems like there might be some hope for the financials to pull up the SPY and prevent it from dropping as heavily. Okay, and the highlight of this week for the financials would be the earnings release for a few of the major banks. For Bank of America, we can see that it is reporting earnings on the 16th of July. And I've drawn a trendline support which has been tested by the March lows, the May correction, and the recent correction. Right, and all these three corrections tested and bounced off this trendline support very nicely. So if earnings results don't disappoint, we can expect this bounce to hold off and more upside for the banks to come. Perhaps up to the point of the 200 SMA, which has resisted the prices before. And if you look at JPM, it's also a similar story. There is some sort of a trendline support, even though it is not very nicely respected and tested by all three corrections. But nonetheless, the bounce off this support has been holding, and earnings for JPM will be together with Wells Fargo, WFC, going to be released on the 14th of July before market open. Alright, the last thing that I'd like to share with you guys would be some of the Chinese stocks and also the global emerging markets ETF. Alright, let's first take a look at Alibaba. Alibaba, the situation has been almost like the same as the other tech stocks. A sharp parabolic move upwards, and then it is now in the midst of a correction. So let's hope for Alibaba to correct back down to test the 50 SMA, $216. This would be the level where I will be comfortable enough to take another long trade or consider a long-term value investing position in Alibaba itself. And when that happens, I will alert you guys again. Alright, together with Alibaba, the same case has been observed for the general China market. This is FXI, one of the ETF that tracks the China large cap companies. On the chart, you see a support at about $40, which prices has visited and respected for several times now, before the last bounce off this level and also the 40 EMA all the way up to about a high of about $46. And when I see that, even though I'm happy myself because I'm an investor in FXI itself, I'm also worried and concerned about this parabolic sharp move. And I know that prices will not be able to stay up here for very long, and that is why I went ahead to execute a view strategy on FXI. I'm holding on to 151 shares of FXI, and this allows me to sell one covered call on FXI itself at a strike of $46, which is the high that we have seen previously on the chart. And when prices correct back down, I am making good profits already. Alright, and along with FXI, EM is also behaving similarly, mainly because a large proportion of EM is being held in the China market. And you can see this parabolic huge move upwards. And if we project the price targets using the Fibonacci extension levels, the 161.8 level seems to be the one that is resisting prices. And likewise, when I see this, I went ahead to execute two covered calls for my EMs as I'm holding 200 shares of it. And when these options expires out of the money, I'll get to pocket all the premium that I've collected. Alright, so there exists many ways for you to grow your wealth in the market, be it through a passive investing or long-term value investing or even swing trading or options trading. And the best thing is all of these strategies have been discussed in details in the channel. And if you are still with me till this point, I thank you so much for watching the video. I also like to invite you to join our newly formed Telegram community group, which is aimed to promote a more interactive discussion and also sharing of trade and investment ideas with each other in the group. Just enter this link that is up on the screen and we are good to go. And as always, show your support to the channel by hitting the like and subscribe button. Thank you so much and I see you in the next video.